It's 12:03, so we're going to get going. Hello, welcome. Very excited to welcome you to this week's webinar. We are talking about carbon accounting and science-based targets in these TCFD and IFRS reports. And so I'm going to share my screen here. Perfect. So here's a little bit about what we are going to talk about today and how the framework is going to work. So we're going to talk about who we are. Again, why are we talking about this? What these climate risk reports actually expect of you. We'll talk about the specific questions where they ask about carbon accounting, science-based targets, and those kinds of things to really understand the connection. But then go a little bit further and talk about how policy risk and market risk, these other components of climate-related financial risk, relate. I'll share a couple of examples of how companies are reporting this today, and then we'll talk about how Beehive works. I've got the Q&A section open. I've got the chat section open. So feel free to ask questions as they come up. So let's get into it. Who are we? So my name is Adriel. I run a company called Beehive, and Beehive helps businesses with what's called enterprise climate risk management, which means we help our clients measure their financial exposure to climate-related disasters, publish these IFRS S2 reports, and do a lot of that work. So let's talk about what is actually expected when you are talking about climate-related financial disclosures and these, you might call them TCFD reports, recently adopted by IFRS S2, whatever you call them. There's really three questions that come in the final section, this metrics and targets section, that ask you for information related to carbon accounting and science-based targets. We're not going to go into definitions of carbon accounting and science-based targets here. We're going to assume a certain level of knowledge, but it's these last three questions here that ask you for this information. So in the metrics and targets section, these are questions 9, 10, and 11 in a traditional climate risk disclosure. They ask you describe the metrics used by the organization to assess risks and opportunities. They ask you to disclose your scope 1, 2, 3 emissions. Pretty bluntly, they ask you for that. And then they ask you for the targets used to manage these risks and opportunities. Question 1 here, or I guess recommend disclosure A in metrics and targets, and C sound very similar. One asks for the metrics you use, and the other asks for the targets you use. It took me a while to figure out the difference in reading a lot of reports. But the way I'd like to think about it is the metrics, you're just saying, what do I measure? And the targets, you're saying, do I want to get better at anything? Or am I particularly concerned about exposure in any capacity? So those are the kinds of places in which carbon accounting and science-based targets might begin to show up. So let's talk about a few specific kinds of things you might be measuring there. So when you talk about metrics and targets, this is from the TCFD guidance, one of the more recent ones that they released a few years ago. They have this list of things you might want to disclose as a climate-related metric. Now, there's the obvious one of GHG emissions. I can zoom in here a little bit, where you might want to talk about how we track our carbon footprint, or even related things like energy use as part of our climate risk program. And you'll see a bunch of examples of companies doing that. So this first one is fairly common, but I think some of these later ones are actually very important and only beginning to be used a little more frequently by companies who are really in their second and third year of doing this work. And so you might want to disclose metrics around things like transition risks. So what is the percentage of your assets or business vulnerable to these risks? So we'll talk about market risk in a moment, but you might begin to say, if I have $20 million of revenue coming from customers that are setting their own science-based targets, then you might make the assumption that all those customers might then expect you as one of their vendors to also set science-based targets, which creates a $20 million liability in your business if you decide not to set those science-based targets. So one thing that a good enterprise climate risk management program decides to measure is how much exposure do you have, not just from physical risk, which we'll touch upon in a second, but from this transition risk. If you bring on a new customer or you enter a new industry, does that increase your exposure because you want to sell to Salesforce? Salesforce sets SBTis. If you don't set targets or you don't meet targets for a good reason, you might lose that business. Do you want to enter the European automotive industry, where if you want to work with Volkswagen or BMW, you basically have to set targets? that could create a big issue there. You also want to track physical risk metrics. And so this is really kind of not being done by a lot of American companies yet, but you'll see it done. And I'll show you an example later of it being done by a UK company because climate risk and TCFD has been around in the UK for much longer. But here you might want to think about, I see a couple of folks on the call, so I'll make it relevant. Imagine you're a law firm and you've got 20 offices around the United States, Canada, Europe. What percentage of those offices are in high risk areas? What percentage of those offices might be vulnerable to what they call material climate related financial risks, climate related physical risks? You can decide what materiality is, right? If you are a law firm or a software company and you don't own any offices, you lease them all, and as like everybody can work from home, and one of your offices could be in a wildfire zone or a flood zone or a hurricane zone, but as long as everybody's safe, you'll really be okay and it's not material. You might want to determine that, but you might also want to disclose those kinds of risks. So we'll touch upon all the others, but that's just the sorts of metrics you might want to talk about in that metrics section. And targets would be the flip side of that. All right, we know the metric. We have X, we track our emissions, or we track our business that has a transition risk, or we track our assets or footprint that has a physical risk. Target is, do we want to reduce that? Do we care about it? Do we track how many times a wildfire disrupts our business? Whatever. There's these two other places. Actually, we can skip this part here. There are these two other places where GHG emissions and science-based targets show up in your climate-related financial risk report. It's in these transition risks that we talk about. So the first is policy and legal, because examples of these climate-related risks you might talk about are the risks of increased pricing of carbon emissions, or what we may call a carbon tax. You might also talk about how there's exposure to litigation or mandates on the regulations of different services where you say, hey, there's more and more laws coming out that actually require me to talk about my carbon emissions. I don't know if there's laws yet that require you to set a science-based target, but there's like laws like in the EU, the cross-border something mechanism. One of the nice ESG lawyers here can help me out. I think it's called CBAM, where basically you might get taxed if your emissions are over a certain amount. So like those are places where you have regulatory risk from either not measuring your emissions at all, because you might not be able to comply with a regulation, even in the US, like California's SB 253. If you don't set emissions, if you don't measure emissions, that creates a risk there. And then on the flip side of, if you don't set a target to reduce emissions, you might have to pay carbon taxes. So these things pop up as well on the policy side. And then we talked a little bit about the market risk that might come up. This can be called market, can be called reputation, something along the lines of changing customer behavior, reduced demand due to changing preferences, or kind of comes up again here, shifts in consumer preferences, reduced revenue because of decreasing demand. Because if you're not measuring your emissions, you literally cannot win a contract with Microsoft or Salesforce or Amazon or BMW. And if you are not becoming a more energy efficient business, then they might begin to drop you for businesses that are more energy and carbon efficient. So those are a few places in which you might find carbon emissions or science-based targets really showing up throughout the climate risk report. So I'm going to go through a few examples. And again, pop into the chat if you have questions or you want to understand policy risk, market risk, or what those last few questions of the TCFD report or IFRS S2 report really ask for related to carbon emissions. But for these examples, I pulled out one like truly great example of this from Motorpoint, which is a UK company. And the UK has had these TCFD rules for a few years, so they're just a little more sophisticated. And a bunch of these American companies that have done this for a couple of years, and they're not best in class, but they're definitely good enough. And so I think most people on this call will probably veer to be like this, but I want to show you what great looks like. So this is Motorpoint. And I think what they do here that's really interesting is that, of course, they disclose their carbon emissions, and great, they do that. But they also talk about the metrics related to the risks or opportunities that they care about. So they'll name the risk or the opportunity. So example, risk extreme weather events that could lead to site and inventory damage. They'll name the metric that they track, which is insurance premiums, and they'll talk about how they use it. And again, remember that the whole goal of this is to give your investors transparency into whether or not you have high climate risks. And if you do it this way, you at least give them the ability to know that you're on top of this, know what you're measuring. And then when they get on a call with you, they can ask questions about this. Hey, I see here that there's a risk you might not be able to reach net zero without offsetting. So what are you doing about that? Well, here's the metric that we're tracking. We're tracking our absolute emissions, and we use this to report, and you can begin to really control the narrative around that conversation. So that's a really good example where they'll talk about metrics of the fact that they measure their emissions, but they also talk about all these risk metrics that come from that. Here's a few examples of disclosures that are entirely good enough. So again, I'll zoom in here a little bit. This is Workday. Workday has a great sustainability program. So if you're modeling yourself after them, you're in a good place. But Workday talks about how, excuse me, they measure carbon emissions and their use of renewable energy. They talk about how they match 100% of this electricity used with clean renewable sources. And they talk about they kind of combine these sections, which I personally don't love. I think these should be separate sections, but that's okay. So they talk about the metrics they track around carbon emissions. They talk about the metrics and targets they have around renewable energy. And they also talk about how they're engaging suppliers. They want to have 70% of their suppliers by spend committing to science-based targets. So what's interesting here is that they are showing how they have this target related to carbon emissions and science-based targets. And this is the flip side of if you are a Workday vendor or want to be a Workday vendor, this becomes a market risk for you because you now cannot win or maintain a large Workday contract without having these science-based targets and reducing emissions in that way. So interesting example. And then very simply, they report on their carbon emissions. Another example is ServiceNow. So they made this very, very simple. So they tell you that they track absolute emissions. I actually like what they did here because they separated metric and target really cleanly. They track, the metric is absolute emissions, percentage of renewable energy procured, percentage of suppliers with science-based targets. They pointed you in the direction of carbon emissions. Again, I don't love this. I think you should just publish it in here to make it all in one place. But if you want to, you can click here and you'll see the actual emissions. And then in this section C, they talk about the targets. They have these science-based targets. They have this commitment to be net zero. They have a goal of being 100% renewable energy. They want to have a carbon neutrality target, or they have this carbon neutrality target. So they did a good job here of saying, here's our targets, these three things, just a target, no numbers. Here's our metric, just these three things, just the metric, no numbers. And then here's the target. Here's what we're actually trying to reach. Another example is Pinterest. So Pinterest did something like this, where they said, here's what they monitor. They really monitor just energy emissions with a few intensity targets. They didn't talk about energy or anything like that. And they pointed you in the direction of their impact report, where they have a lot more context about the science-based targets that they have, about achieving 100% renewable energy as a goal, about new office locations having recycling and indoor air quality goals. So the kind of thing that they track. So they kind of went back and forth between the TCFD report and other pages of this impact report. The way they did it is they created a TCFD index at the bottom of their broader impact report. So that's an acceptable way of doing this. Again, what I see is most common and what I think is easiest for your investors is if you try to really answer the question within that particular area, no one's going to sue you for doing the opposite. If your investors have a problem with it, they will share that problem. But this is how Pinterest did is they kind of balance between the TCFD appendix somewhere back here and other parts of the report somewhere up here. Another example is GitLab. And I'm pointing out the GitLab one because this is just very simple. Recognize the importance. They said that they completed their very first GHG inventory and some of the other things that they track. They pointed you to where to disclose this. And this is where it gets interesting because the next one I'm going to show you is Jack in the Box, who has very little of this work done at all. But GitLab doesn't really have targets. And so this is how they disclosed it. They said, we understand the importance. We are continuing work to establish these targets. So that gives them kind of, they're eating their cake and having it too. They have not set the target. They have not disclosed the target. They have not gone out on a limb about the target. If they decide to set targets, they'll be like, great, we did that thing we said they would do. If they decide not to set targets, they can say, well, we are going to continue to work on this in 2026 as well. So I think it gives them a way out. So if your company is not fully, you're just not there yet to set these targets because you're not sure how to do it. You don't want to take the risk. Your leadership doesn't want to get involved in that. You're curious what the current administration will do to you. This is a nice way to just say we're working on it. And then the last example here is Jack in the Box, because they don't really do anything yet. And so this is how they answered it, which I think is totally fine. This is just a disclosure. If your investors care, they'll tell you, hey, we really want to see you measure your emissions, and you'll go to your CEO and say, hey, an investor owns 100 million of our company, wants us to measure emissions. And if they read this and don't care, then they don't care. So Jack in the Box talks about how they do not calculate GHG emissions, but they do look at other things like relevant things. Energy consumption, obviously super relevant, and waste data, super relevant for a large restaurant. And they again give this generic statement of like, there's potential for a company to assess our footprint or work on internal carbon pricing model, understand these things. They don't measure emissions, so they just set that. We don't do that. We're aiming to do it. And then same thing on targets. We lack quantifiable carbon targets, but they're committed to transitioning to renewable energy. So they said what they do. And they did talk about how their headquarters renovation involves solar initiatives, and they want to offset 97% of their consumption. So this is just a bunch of examples ranging from Motorpoint, which was super transparent about, it totally lost my page, but which was super transparent about not just greenhouse gas risks, but these other risks that show up there, to Workday and ServiceNow that are a fine job of just telling you what their carbon footprint is and what the risks are, all the way down to Jack in the Box and a little bit of GitLab, who just haven't done a lot of this work yet. And this is how you might disclose that you haven't done it. So I'll pause there. Well, I won't necessarily pause, but if you guys have questions about any of these examples or how to think about carbon accounting or setting a science-based target, and whether it's good or bad, or what I'm seeing, how this shows up in reports, or we can dive more into like the rules of the IFRS, we can do that. But until I see a question pop up, I will show you how Beehive can help with this. So this is the Beehive software. I'll show you a couple of things here. One is, you see I uploaded a GHG inventory. This is Okta. They're not a client. I just like to use them as an example. This is what that inventory actually looks like. If you open this up here. This is what that inventory actually looks like, just for context. A lot of companies have a report like this. You get it from your carbon accounting vendor. So this is basically what I uploaded into Beehive here. And then what will happen is, just a moment, we got to do this here. Sorry about that. What'll happen here is that you're actually able to see the AI write the answer based on that report here. So there's the Okta report. And it'll pull information out of the report and automatically put in here what those emissions are. And what's helpful here is that it's going to do so using the same language and using the same exact numbers that you've used and approved in other reports. So it'll pull those numbers out automatically, make sure all the numbers are the same. It'll do so for some of these more narrative answers as well. So if you want to understand the metrics, for example, you'll be able to see here that it'll pull out some of the goals or some of the things that Okta tracks, and it'll draft a narrative answer around that. So it talks about how we track our carbon emissions, we track our energy use. Apparently, they talk in that report about tracking employee engagement, and it'll do the same thing for your targets, where it'll talk about whatever Okta put in that report. It'll talk about, hey, here's how we set. I don't know. Let's find out what it actually talks about. They have a team. They track targets. They aim to reduce Scope 1 and 2 emissions by 67%. And this is how they're doing on that so far. Actually, that's very clever by the AI to do that really well and say, not just here's our target, but here's our performance. And it pulled that out of approved language already. So I think this helps clients just save a ton of time, like writing, copying, pasting, reapproving language, figuring out how to answer, how to draft. And again, what's cool is that you can see how all of your peers answered any of these questions. So if you want to say, all right, so here's what the AI came up with. How are my peers answering this? Like, who do I want to compare myself to? Who do I like? And you could just, click around and say, here's the question, the companies I really want to compare myself to. How did they answer question 11? How did they answer question 10? How did they answer question 9? And you can do some of that work. So, well, like writing that report becomes, takes 5 seconds, what would normally take many hours of work, and getting that language approved, and then comparing it to your peers. What's also cool, and again, pop in with questions as you have them, is that we talked a little bit about the regulatory risk, right? That there's a lot of laws that require you to report on carbon emissions, and there's risk if you don't, and that's kind of this connection between carbon emissions, science-based targets, and climate risk. What you can do inside of Beehive is we have this database of global legislation. And what's cool is that we can apply what is relevant to your company automatically. And you can see the potential penalties you might be subject to if you don't comply with these rules. And for any one of these rules, if you want to come in here and understand it, here's a bit of the explanation. Here's the original law. You can understand the groups. And so you can like really figure out what laws exist that require me to do this stuff. How do they change? How do they compare? What might the penalties be over time? And what's going to be pretty cool here is that actually by the end of the day today, you'll be able to see bills in here as well. And so there's many bills all over the world, actually just in the United States. You've probably seen a lot of the news that a lot of the Democrat-run US states are pushing forward bills, some brand new bills, some that have been just kind of working through their courts for a while, or their Senate and Assembly for a while. In response to the current federal administration, the states are moving forward bills to say New York and Colorado and Washington and Minnesota are moving forward bills to say we want companies of a certain size to disclose emissions. So you'll be able to see those bills and then say, well, to your leadership, like, here's what's coming. Like, sure, here's what's exists. This is the law section, but here's what's actually coming. A few weeks after that, you'll be able to actually use AI here and be able to ask it questions like, tell me if my revenue that's currently at 700 million in revenue and I climb to 1.1 billion in 3 years, what laws will apply to me then? And the AI trained on all these laws will be able to tell you. You'll be able to ask questions like, I want to understand what are the total penalties associated with my decision to not report on carbon emissions? And it'll answer that question for you. So there's a lot of really cool things you'll be able to do here with AI trained on relevant regulation with some knowledge of your business, because you can upload a 10K or a financial statement or like your revenue information, or we know where you have jurisdictions or the areas in which you work. So the AI will be really, really useful to you figuring out, hey, what's coming? Where is it happening? All with the asterisk of call your lawyer. And this is just supposed to like give you some information so you're not running around reading newsletters and blogs and trying to piece this stuff together. You can at least come with a point of view and a set of questions to your outside counsel. The last thing I wanted to share, so this is live, like customers have this right now, and some of that AI stuff is coming in the next few weeks. The last thing I wanted to share is market risk. So we talked a little bit about this, about how you might have market risk that you might want to report, you might want to track of your customers who have science-based targets, net zero goals, scope 3 targets, whatever, where if you don't do this work, you might lose that business or you might not be able to earn that business. And so this is just in very, very early designs, but we're thinking of building this probably next quarter, where you'll be able to upload all your customers and the revenue associated with that. And the third question is around security. We have every security thing you can imagine: pen test, SOC 2 Type 2 compliance, all that kind of stuff. So we usually do OCAN security. What you'll be able to do here is say like, hey, I want to understand who are my clients that have science-based targets. Show me all of those. Who are my target companies who have net zero goals? How much revenue do I have at risk from these climate targets? If you want to actually get in touch with one of your customers, we'll be able to pull in data about who runs ESG if they have that kind of person there. And so you can actually kind of interact with them. So this is one of those ways that Beehive can help you run your entire enterprise climate risk management program. And this report that you get at the end of it, like, yeah, every year if you're doing CSRD, every other year for SB 261, maybe every year if you feel like it, you click the button, you get this report. Great, it spits out all that work you did. But a lot of this work and measuring risk, staying on top of it, all happens in here. So, I have a lot of talking. I'm going to pause for a full 2 minutes until the 12:30 mark, because I covered a lot of stuff there. So if you have any questions, anything you want to double back on, um, anything you're curious about, let me know. Let's talk about it. I can dive more into different sides of the Beehive software. We can read, I have lots of, actually, if we talk about carbon emissions, lots of examples here how companies are reporting on carbon emissions. We can talk about some of those. We can talk about the direction of like the policy library or how some different laws around the world ask for this stuff. So let me know if anything's on your mind. Beautiful. Very nice comments from Nina. They were doing a thorough job. Not a lot of questions. It's very clear. Thank you, Nina. I appreciate that. Feel like I can sign off, but one of the first times I did this, somebody told me I signed off too quickly. So we'll just hang out together for a minute and see if anyone has a question. But if not, you're welcome to go, or we can call it a day. Perfect. Why not? I appreciate it. Thank you everybody for joining. I hope this was helpful and valuable. We'll send over the slides to everybody who could and could not make it, and hope to see you next week. Next week, we're going to talk about, oh, we're going to talk about regulatory risk. So we're going to talk about a lot of these laws, how to track it, how to manage it, and I'll dive much deeper into this policy dashboard here. So hope to see everyone next week. Bye-bye.